Today, we're tackling something that, well, it hits close to home for pretty much every driver. How basic things like your age and gender can really shake up what you pay for car insurance.
It's true. And looking at some data like from FreeAdvice.com, the differences can be pretty stark. We're talking hundreds, maybe even thousands of dollars a year.
Wow. Okay, so that's significant.
Definitely. So our mission today, really, is to dig into the sources, unpack why age and gender are factors, understand the details, and see what it all means for your insurance costs and how you shop around.
All right, let's get into it, starting with what seems to be the biggest piece of the puzzle, according to the data: age.
Absolutely. Yeah, when insurers look at risk, age just stands out. It's probably the single most significant factor.
Why is that? Is it just experience?
It mostly boils down to statistics, really. Driving experience, yes, but also patterns of behavior associated with different age groups.
And I gather young drivers feel this the most. The difference is pretty dramatic, right?
Oh, it really is. Teenagers, especially. They face the highest premiums, by far.
Okay.
Insurers rely on data from places like the CDC, the Centers for Disease Control, and unfortunately that data shows car accidents are just much more common among younger people.
So those statistics directly feed into how insurers calculate risk for, say, a 17-year-old.
Precisely. Newer drivers, well, they just haven't clocked the hours behind the wheel. Statistically, they're more likely to have accidents. And that higher risk means higher costs to insure them.
The numbers we saw really highlighted that cost difference. It was kind of shocking.
It can be. For example, the data suggests a 16-year-old might pay, get this, up to 300% more than someone in their 50s.
300%. That's not just a tweak. That's a massive difference.
It's huge. It really shows the impact of age and that associated risk level.
So is it just brutal for teens, or does that high cost stick around for a while?
Well, it's definitely highest for the youngest drivers, like under 20.
Yeah.
But the good news is rates usually drop quite a bit as drivers get more experience.
Okay.
Often, there's a really noticeable decrease around age 25. That's kind of a milestone.
The magic number everyone waits for.
Exactly. Insurers generally see drivers hitting that age as having enough experience, maybe demonstrating safer habits.
And after 25?
Premiums tend to stay lower, more stable, through your 30s, 40s, 50s. Actually, the data suggests the sweet spot, the cheapest rates, often happens around the mid-50s to early 60s.
Right. That makes sense. Lots of experience, lower statistical risk then.
It's that combination.
But I've heard it doesn't stay low forever. Rates might creep up again later in life.
That can happen, yes. Yeah. Past age 65 or so, you might see rates start to nudge upwards again.
Okay.
It's usually a much more gradual increase than that big drop at 25, though. It's often linked to potential age-related changes, vision, reaction time, health factors.
But not always. It depends on the person.
Exactly. It varies a lot. Someone's individual health, their driving ability, keeping a clean record, that all plays a big part.
Let's look at some specifics. The source data mentioned that standard 100, 300, and 100 coverage.
Right, so 100K bodily injury per person, 300K total per accident, 100K property damage. Pretty common.
For that level, a 16-year-old could be looking at, maybe over $600 a month in some areas?
Easily. And then you compare that to, say, a 60-year-old driver. Same coverage, same area. They might be down around $126 a month.
Wow. That gap is almost entirely down to the age factor then.
It really highlights the statistical risk difference assigned to those age groups.
And those quick case studies we saw kind of painted a picture too. Like an 18-year-old female, maybe clean record, still paying $300 a month.
Yeah, just based on age and limited experience. Or a 17-year-old male, potentially even higher, maybe $500 a month. Age plus some gender stats we'll get into.
Compared to like a 65-year-old male with a good history, maybe paying $150.
Exactly. Those aren't extreme examples. They show the real impact of these age-based profiles.
Not sure how your age affects your premium?
Head to FreeAdvice.com and enter your zip code to compare personalized quotes from top insurers. It's fast, free, and made for you.
Okay, so age is clearly massive. Let's shift gears a bit to another factor. Gender. This one feels, maybe a bit more controversial sometimes.
It can be, yeah. Gender is another factor insurers use, though how much it matters can depend on where you live and the insurer's own data.
But why use it at all? What's the logic?
Well, the fundamental reason, where it's legally allowed, is again purely statistical. It's based on data about driving behaviors and accident rates between genders.
And historically, that data showed differences, especially for younger drivers.
It has. Organizations like the IIHS, the Insurance Institute for Highway Safety, they've consistently found that young men, statistically, compared to young women, are more likely to engage in riskier driving, things like speeding. And sadly, they're involved in more serious, even fatal accidents.
And insurers translate that statistical risk into higher premiums for young men.
That's the connection, yes. They fall into a statistically higher risk pool. So, for instance, the sources suggested a 20-year-old male driver might pay about 15% more than a female driver at the same age.
Assuming everything else is equal.
Right. Same car, location, driving record, all that.
Okay, so there's a clear difference there, but it seems focused on younger drivers. Does that gap stick around forever?
No, generally it doesn't. That gender gap in rates, it tends to shrink quite a bit and often disappears completely by middle age.
Why is that?
As drivers get older and build up their own driving history, that individual record becomes way more important than broad statistics about gender. Experience trumps the demographic factor, basically.
That makes sense. Individual behavior takes over. You also mentioned location matters for gender pricing.
Yeah, and this is really important. Does every state allow insurers to use gender? The answer is no.
No.
Several states have actually banned it. They've said insurers cannot use gender to set auto insurance rates.
Do we know which states those are?
Based on the info we looked at, yeah. California, Hawaii, Massachusetts, Michigan, Montana, North Carolina, and Pennsylvania.
Okay, that's a good list to know.
So if you live in one of those states, your gender legally can't affect your premium.
That's a critical point. It shows how state regulations can directly override these statistical models. Your location doesn't just impact risk, it impacts how risk is even calculated.
Curious how gender pricing works in your state?
Visit FreeAdvice.com and enter your zip code. We'll show you the specific rules and insurers available near you. All right, so we've covered age as the big one, gender as significant but variable. What about other personal things, like credit score, marital status, your actual driving record?
Oh yeah, these are super important too. They layer on top of those initial factors. Let's talk credit score first. It might not seem obvious how that connects to driving.
Right. My credit's about paying bills on time. How does that link to getting in a crash?
Well, insurers have found, through looking at tons of data, a statistical link. They see a correlation between someone's credit history and how likely they are to file an insurance claim.
Really? What's the thinking there?
From their perspective, a credit history can signal something about overall responsibility, financial stability. And they believe that might translate to more responsible driving behavior and maybe filing fewer small claims.
And does it make a big difference to your premium if your credit isn't great?
It can make a huge difference. The data we saw suggests drivers with poor credit could pay, well, up to 61% more on average than someone with excellent credit.
61%. Wow, that's almost as big a jump as we saw with age for young drivers.
It really is significant. And, this ties back to young drivers again.
How so?
Well, beyond just lacking driving experience, teens and young adults often haven't had time to build a strong credit history, or maybe any credit history at all. That can contribute to that higher risk profile for insurers.
Okay, that makes sense. So, credit's a big one. What about marital status? Does tying the knot actually lower your insurance?
It often does. Married drivers frequently get lower rates than single drivers, even if everything else is the same.
Why is that? Just seen as more stable?
That seems to be the statistical reasoning, yeah. The data suggests married folks are involved in fewer claims overall.
Interesting. Okay, and then there's the most obvious one, right? Your actual driving history.
Absolutely. This one feels intuitive, doesn't it? And it becomes more and more important as you age and build that track record.
So keeping it clean is key.
Definitely. No accidents, no tickets. That's one of the best ways to keep your rates down over the long haul. Your individual record is hugely important.
And the flip side is true too, right? Even one little mistake can hurt you.
Precisely. Just one speeding ticket, or maybe a minor fender bender that was your fault. That signals higher risk to your insurer, and you'll likely see your premium go up, sometimes for a few years.
So even if you hit 25 and expect your rates to drop because of age, if you've got recent tickets or accidents, that can cancel out the benefit.
It absolutely can. As one agent mentioned in the sources, for drivers in their 30s, 40s, 50s prime age group, right? Their actual rate really hinges on that clean record, their credit, and the coverage they choose.
Coverage levels too.
Yeah. You might qualify for a lower base rate due to age, but if you choose really high coverage limits, your overall cost will naturally be higher than someone choosing just the minimum required coverage. Age doesn't make the coverage itself cheaper, just your underlying risk profile.
Think you're overpaying?
Head to FreeAdvice.com enter your zip code, and see what your premium should look like based on your credit, driving record, and more.
Okay, so we've got personal factors covered, but it's not just about you, is it? It's also about where you live and the specifics of your insurance plan.
That's exactly right. Your zip code, your location, plays a massive role. Insurers analyze risk down to very specific geographic areas.
What are they looking at in my neighborhood, for example?
All sorts of things, like how dense is the traffic. Lots of congestion usually means more accidents.
Makes sense.
They look at local crime stats, car theft, vandalism rates, how often accidents happen on the roads right around you, even local weather patterns, like frequent ice storms or hail.
And I guess the cost of fixing things matters too, like if mechanics or hospitals charge more in my city.
Exactly. The average cost of medical care and auto repairs in your specific area, that directly impacts how much a claim could cost the insurer. So they factor that in.
So living in a busy city generally means higher rates than out in the suburbs or country?
Generally, yes.
Yeah.
Higher traffic, maybe higher crime, higher repair costs. It usually adds up to higher premiums.
Okay, location is key. What about how much I actually drive? Does my commute matter?
It definitely does. Your annual mileage. Basically, the more you're on the road, the more chances there are for something to happen, right? So if you have a really long daily commute or use your car a ton for work, you'll likely pay more than someone who works from home or just drives short distances occasionally.
And cars that aren't driven much, like a classic car.
Often qualify for lower rates, yeah, because the risk exposure is just much lower.
And then the big one, the actual coverage you choose, that directly impacts the price tag.
Absolutely fundamental. Your coverage levels determine the maximum amount your insurer will pay out if something happens.
So higher limits cost more.
Exactly. If you choose higher liability limits, or if you add comprehensive and collision, which cover damage to your car from theft, weather, or accidents, or things like uninsured motorist coverage, well, all that extra protection comes with a higher premium.
Because the insurer's potential payout is bigger.
Precisely. And remember what we said earlier. The cost for a certain level of coverage doesn't necessarily drop with age like your base rate might. Higher coverage costs more because the potential claim cost is higher, regardless of whether you're 25 or 55.
What about the deductible? How does that fit in?
Right, the deductible. That's the amount you pay out of pocket on a claim before insurance steps in.
Okay.
Choosing a higher deductible usually lowers your premium.
Why is that?
Because you're agreeing to take on more of the initial financial hit yourself if you have a claim. The insurer's potential payout starts after you've covered that higher deductible amount.
So it's a trade-off. Lower premium now, but potentially more out of pocket later if you have an accident.
Exactly. It's about your risk tolerance and budget.
So going back to those examples, like the 30-year-old woman paying $200 a month or the 40-year-old veteran guy paying $180.
Yeah.
Those numbers aren't just about their age or gender anymore. It's the whole picture, right? Their age, probably a good driving record, decent credit, where they live, and the specific coverage limits and deductibles they pick.
That's it, exactly. It's the unique combination of all those factors that results in their final premium.
Not sure if you're carrying too much or too little coverage.
Enter your zip code on FreeAdvice.com and get matched with plans that fit your driving habits and location.
Okay, wow. That's a lot of variables. Finding the best deal sounds, frankly, kind of exhausting. Any tips for shopping smart?
The absolute number one thing is compare, but don't just chase the lowest number.
What do you mean? What else should people look at besides the price?
You've got to compare the policies apples to apples. Look closely at the coverage limits. Are they the same? What about the deductibles? What types of coverage are actually included in that cheap quote versus a slightly higher one?
Right, so maybe the cheaper one has much lower protection.
Could be. And beyond the policy details, think about the company itself. What's their reputation like? Check out customer service reviews, how they handle claims.
That's a really good point. A cheap rate isn't worth much if the company is a nightmare to deal with when you actually need them.
Exactly. And trying to get individual quotes from like 10 different insurers by visiting each website or calling them up, that takes forever.
Yeah, no kidding.
Using online comparison tools is really the way to go. They let you put in your info once and get multiple quotes back, tailored to you. It just streamlines the whole process massively. Saves so much time and hassle.
Okay, so comparison tools are essential. Is this a one-and-done thing? Find a good rate and stick with it.
Definitely not. Auto insurance prices change all the time. Insurers adjust their rates. New competitors enter the market. So we really recommend reviewing your policy and getting fresh quotes regularly.
Like every 6 months or at least once a year.
You might find a better deal even if nothing about you has changed.
And definitely shop around if something has changed. Right?
Oh, absolutely.
Yeah.
Big life events are key moments to reshop. getting married,
Right.
buying a new car, even just having an old ticket finally drop off your record.
Or turning 25.
Or turning 25, exactly. Any of those things could mean you qualify for significantly lower rates. Your current insurer might not automatically give you the best new price, so you need to look around.
Ready to compare real quotes the smart way?
Just enter your zip code on FreeAdvice.com and we'll do the work. It only takes a minute.
If you're finding deep dives like this helpful, make sure to subscribe so you don't miss what's next. Well, that brings us to the end of our deep dive on how age, gender, and a whole lot more affects your auto insurance bill.
Yeah, we've seen age is huge, especially for young drivers. Gender plays a role too, particularly early on, but its impact fades and, importantly, isn't allowed everywhere.
And understanding how those demographic factors interact with things you can control, like your driving record, your credit, where you choose to live, the coverage you select, that's really the key, isn't it?
It really is. It gives you the power to understand why you're being quoted a certain rate and helps you shop smarter, makes you an informed consumer.
Definitely.
And, looking forward, it's interesting to think about how technology might change things even more.
Like telematics, those things that track how you drive.
Exactly. Using data on your actual driving habits, your speed, your braking, how much you drive, could make insurance even more personalized.
Thanks for listening.
That's it for now.